Hello there, I'm Sean Dawson, Head of Insights here at DeVono Cresa, and our latest podcast is going to look at the window of opportunity that is out there for tenants in 2021 and beyond. Levels of committing to new office space hit rock bottom in 2020, and remote working on such a grand scale has highlighted to many businesses that there is an alternative operation model out there, one which impacts the workforce and in turn the workplace. Businesses have and will continue to review their footprint. Those who are looking for space, the marketplace for space has moved on over the past year. And I'm joined by my colleagues Gemma Ford, Head of Flexible Leasing, and Ben Ashby, Director in our Occupier Advisory Team, to discuss how the marketplace has shifted and the implications on those businesses who are looking at whether it's leasehold space, flexible space, or in general, how the workforce is going to get impacted. I suppose question for both of you on straight away is, market dynamics have shifted in the past 12 months. How has that manifested itself in your specific focus areas? So Ben, if I come to you first on a more traditional leasehold front, how has the market moved in 2020?
I would say that the biggest thing from my point of view is that the amount of choice out there has just increased enormously for occupiers, whether that be looking at different sort of types of offering from landlords, but also the amount of space that's been brought to the market from tenants looking to sublet or assign surplus space. There's never been more choice for occupiers these days, I don't think, and that transcends into the quite compelling deals that can be agreed on behalf of occupiers at the moment. So, yeah, very much a tenants market.
And rental expectations have come down significantly over the course of the year, but obviously it's very space dependent. Will this remain a factor heading into 2021?
I do foresee that is going to be a characteristic of the market for the next probably 9 to 12 months, I would say. Rental stagnation and, as you say, decline in certain areas. It is dependent on various submarkets. Some are doing better than others. That has to be said. But I think that the biggest standout for me and what we're seeing is that the level of incentive packages has just skyrocketed, especially when the space on the market from occupiers is kind of competing against the landlord stock. And
when we talk incentives, we're talking kind of rent-free periods that
yes.
Tenants can obtain.
Exactly, that's the main force, and then obviously sometimes there are capital contributions that can assist with tenants who need to make changes to fit out, etc. But that is also covenant dependent. So in the main, it's a period of free rent. Yeah.
Gemma, can you match that in the flex world?
Sure. Okay. So we've spoken about this before, and I think there's no real change today in that, the pandemic has brought about a lot of supply in the market. Operators of flexible workspace, namely the serviced office market, they have taken a hit, as all landlords have across this sector. They've had their profit margins squeezed, and operational costs have not come down in kind. So it's a hard situation out there at the moment, and I think everyone is just waiting for the easing of lockdown so that people can actually get back into London and across the UK in all of the regional spaces to utilise them. At the moment, we're seeing a downward pressure on rent. That is the case. We're seeing a lot more on incentives, same as Ben said, especially with capital contributions. I think one of the differences, and Ben and I were talking about this earlier, between both spaces at the moment would be the incentives around COVID clauses. That's one thing we can talk about, and also the emergence of, well, there are two things really in my space. One is the awareness of operators as to the wider supply and the appetite for landlords to deliver more fitted space and Cat A plus and a kind of managed provision of their own, if you like. And just the awareness is fundamental that they know that they know what they're operating against and how to deliver value-based propositions that actually pique the client's interests. And so with COVID clauses and managed spaces, I think they're the two areas that have shifted, and what has now become a much more busy marketplace with more managed style solutions, which we can talk about too.
there definitely has been a swing in favour of the tenants when we're talking about kind of reduced rents, more availability, and just a lot more kind of amenability of landlords trying to kind of make their spaces more attractive. So with that swing in favour of the tenants, is that now coming through in the different solutions that are out there? Gemma, you've just touched on managed solutions. That is just one of what we're seeing as a huge range or a greater range of solutions that are out there.
Well, okay, so I think the first thing we need to do is just explain the managed space offering, because otherwise it's just a sticker for something that I think a lot of people won't necessarily understand the difference, I should say, between the managed space and the service space. So to try and succinctly put it, it's a self-contained workplace that's fit out and ready to be branded, or it's fit out to the client specification, i.e. number of meeting rooms, phone and Zoom booths and collaboration space. And it's presented in a monthly fee arrangement, which is normally on a term of 12, anything from as little as 12 to 48 months. And it's inclusive of your rent, rate, service charge, all utilities, security of the building, daily cleaning and maintenance. That's usually what it encompasses. And there are many that will also include IT provision as standard, some often reception areas and communal areas and overflow meeting rooms. So that's kind of what we're talking about when we speak of managed space solutions. And I think then there are variations between what you can get in the market. So I'll pass it over to Ben to explain what the landlords are now offering, and then I can explain, the differences between the two.
Sure, thanks, Gemma. I think, what's been very prevalent over the last few months is the kind of the coming together of the two kind of markets in terms of flex and conventional. We're seeing a lot of landlords basically just having to compete with the flexible market and offer effectively turnkey plug and play solutions. So they are in turn designing and fitting out offices and then putting them to market so that tenants haven't got to worry about spending lots of capital at the beginning of a lease by virtue of a new fit out, and then they just amortize the cost of that fit out over the course of the term. Now historically, leases from a landlord before the pandemic were you'd be very lucky to get anything less than a sort of 5-year term certain, whereas now landlords are really able to compete, as I say, with the flex market and offer anything from 18 to 24 month deals. They're not licenses per se as you would get in the flexible market, but we're seeing a lot more kind of short form leases from landlords being offered, just to cut back on legal costs and also to save time in terms of actually getting a deal transacted. So as I say, there's a real kind of coming together of the two sides of the market at the moment.
And whilst the range of offering out there is greater, is there a different kind of let's say speed in which businesses could approach each of those particular solutions?
The speed to get in, and actually that's one of the nuances that again Ben and I were talking about, in that Ben, your landlord offerings on the managed spaces are still, at the moment, albeit malleable, they're still slightly more aligned to the occupiers we speak to, who are looking at both sides of the market, leasehold and flexible. And that's just because you've still got, correct me if I'm wrong, Ben, you've still got covenant checks, you've still got a slightly larger deposit, and you've still got a slightly longer point from kind of initiation or finding the building, starting the search, I should say, to finding the building and actually entering it. Is that right, Ben?
Yeah, 100%. Even though, as I say, they're not ultra 100-page lease documents, there still needs to be a legal representative involved to go through with the fine-tooth comb the covenants that a leaseholder has to abide by within that agreement. So it's not as quick as doing a short form license agreement, but in my experience it is getting quicker. That's absolutely, because landlords are very aware, as I say, that many occupiers will be looking at both sides of the coin, and managed providers can do deals much quicker, and therefore they don't want to be at risk of losing out.
And that speed, Ben. Gemma has mentioned in previous editions of these podcasts that that there is that these deals can be done quite quick. and obviously in the leasehold market, there is definitely a longer kind of runway time to do these deals. So as quickly as the market swung in favour of tenants, it can swing back again with landlords. So do you, not kind of putting undue pressure on businesses, but is there a window of opportunity that's short or longer, depending on which solution you take?
I think the opportunity is it certainly has changed, and it is continuing to change. I think it's still a bit of an evolving piece as well. I think what's first and foremost from my point of view is that there's much more of a sense of partnership these days between landlords and their tenants. Historically, it was just about landlords collecting a rent and making sure that they can uphold their investment value of their building by having a tenant within their spaces. But nowadays, it's critical for those relationships to be much more kind of symbiotic. So yeah, the opportunity sits on both sides of the fence from my point of view. That the landlords need the tenants, but vice versa, the tenants need to get quick deals done to avoid delay and running the risk of, if there's a lease event that needs to be completed by a certain date, landlords really need to wake up to the fact that they've got to do deals quickly these days.
Yeah, and whilst it's all good and very beneficial for tenants to be able to capitalize on the benefits such as incentives and rents, but there is that uncertainty that you mentioned, and that uncertainty will extend to generally how much space do they really need, and have we learned any lessons? So going into a leasehold solution, that is pretty daunting if you are going from a situation where you're remote working 100% and then looking for something, trying to embed an element of what we've learned over the past 12 months or so. Ben, how is that a factor in businesses who are looking for space now?
It's a very real factor, and for some it's incredibly daunting, as you say, because you don't want to enter into a commitment based on the last 6 to 9 months. There's been the biggest work from home experiment we've ever had, but how far can you kind of predict that what you think you need now, what if things change, and what if it's not the right solution in a year's time? But what we're doing a lot at the moment is a kind of initial consultancy phase to understand with the clients exactly what it is from a workforce point of view that they feel is important going into this kind of post-pandemic era. So we're talking to businesses by way of workshops, staff questionnaires and interviews to understand, as I say, how a new hybrid way of working could actually manifest itself in a new office, and what the new office really kind of needs to sort of embody as part of the business, and how the culture of the company is maintained. So as I say, we're working with clients at the moment to get under the skin of what they think they need, but then it's a bit of a finger in the air exercise, but at least it gives the client some comfort that there is a bit of data behind the brief that we're going out to market with, whether that's a relocation or a renewal as well.
And there are far too many headlines out there with the larger corporates who are talking of anything between 20, 40, 50% space reduction. And I suppose it's worth kind of pointing out that for those firms, those figures are on a global scale more often than not, and also they are big kind of juggernauts, kind of slowly turning, and those decisions will kind of come out over the next 2, 3, 4 years. Whereas smaller firms can be a lot more nimble and show that agility in the type of space that they take. And I suppose that agility comes into Gemma, where flexible operators can offer a little bit more agility.
Absolutely, they can. I mean, I suppose that's part and parcel of their offering and the incentive to take flexible space at the moment. And we're talking to clients day in, day out really about this and how to help them. And we're in a really good position to do it. We've got our in-house design and build team. So things like occupier planning or occupancy planning, I should say, workplace design, relocation management, all those things which, will also encompass risk analysis, COVID compliancy, workplace zoning, how much of your space is fluid, fixed, collaborative. All of these things boil down to the unknown at the moment. So as much as we can help our clients, we are doing more of it, as Ben said, as a starter for 10. And we're also seeing how important the right work environment is. So when we talk about agility, people need a space to test their hypothesis. They need to go in and they need to be able to say, right, I need some data points here because we've had a year at home. So it doesn't matter how many staff surveys I do, this is all just opinion finding, which is crucial and important, but they want to kind of put some hard data points behind it. So by taking a flexible space, be it on a 6-month term or a 12-month term with, you know, break points, the ability to scale up and down means that they can actually start to say, right, who really is coming in and how often are teams coming together and which teams need to collaborate and is it cross-pollination we need. So all of those things are quite important, and being able to do that with kind of low risk, low financial risk, and also a hub and spoke model so they can do it across various offices dotted around the country, if that may be their setup, depending on the size of the company. That has been hugely advantageous for people so far who have gone back into the office and who are looking to get back.
So there are tenant expectations out there, but then there are also landlord and flex operator expectations. And hopefully what we've discovered over the past year is that they can slowly be aligned. And 2021 is that year where they start to come together. I suppose some would have expected it to be a lot sooner, but towards the latter end of the year, we should start to see things crystallize a little bit better in terms of kind of that vision out of the pandemic. And I suppose if you had one thought or kind of pearl of wisdom that if I was a business looking for office space now, and I was scratching my head on what to do next, Ben, what would that would be? I know I'm putting you both on the spot here.
I think from my point of view, the opportune time, it really is now, because what I'm sensing in the market since the new year, and now the vaccinations are starting to roll out, and there is more of a positive sentiment about getting back to work. It feels like there is quite a lot of pent-up demand out in the market, and that could easily result in quite a heavy sort of swing back towards, you know, lots of space being taken. I think we're going to be in for a busy second half of this year in terms of occupiers looking at taking up space again. Many businesses have been sort of sitting on the fence and waiting to see what's going to happen, but that can't continue forever. Life goes on, and once the summer months roll in and people start to become, you know, fully vaccinated, then I think we're going to see quite a swift return to the office. It's not going to be the same as it was, clearly, but you know, if you are facing a lease event over the next sort of 6 to 9 months, get on with it, because you could actually find yourself in competition with a lot of people during the summer.
Gemma?
I would just say, yeah, and I would just say to people, again, now is the time where almost it plays into the hands of the occupier with less certainty, and that's across the board. So the deals are out there that will suit their business and give an amazing opportunity in terms of a financial opportunity for which to see out the next 12 months. And that's even with an H2 start, which is, I suppose, another emerging trend from the pandemic, is that, you know, what was once a swirl of, you know, within a 12-week position that people would find and go for serviced office space because it is the speed to access it is so fast. I'd say don't wait. You can line something up now for H2 and get the very best deal available. And also it's for them, because you don't need to have all of the answers, because we don't have all of the answers. But, you know, I would advise finding an advisor that you trust and can work with, because they will take the heavy lifting off. They should be experts in this space and have, you know, full breadth and scope of the market, and they can simplify it, and they can support you with all the financial, you know, cost modeling, and find the right workspace under whatever guise of term it is and model, to see out the return to work and make sure that it works for the company.
I think what's clear from what you've both said today is that we are in that period of recovery, and we are kind of looking towards that kind of whole scale return back to the office, albeit in a different format and a different shape. So I think my take on from what we've discussed is definitely there's an element of staff engagement that we need to cover off. We need to understand what is the space that is needed going forward, but not to be knee-jerk in that reaction, but open up dialogue with landlords, flexible providers, and just having that open relationship in whether negotiating on space they're currently in, but also looking at that new space down the line. So I just want to take this opportunity to thank you, and obviously anybody who is watching this who would like more details on what we've discussed or covered, to get in touch at DeVonoCresa.com, and we're happy to oblige. Thank you.
Thank you.
Thank you, Dawn. Thank you very much.